day at the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in the blank minds, margins and leverage like mountains to climb.
Recording.
We're recording.
Oh. Okay. Well, welcome back to Noobs. It is, what is today? The 5th? The 5th of December. Friday. Market is kind of been boring all week, honestly.
We're almost back to normal.
Yeah, volatility's really come in here. So you got the VIX under 16 now. You're back at, well, basically where you started from. So I think this is around the same amount of money that you started with. So really what I would be looking to do today is to take risk.
Turn the fan off. Forgot to pick that up. Thank you.
All right, so really what I would be looking to do is to take risk off.
Okay.
Kind of across the board on things that you have a lot of risk on. Some things you don't have a ton of risk in. And are working like that Archer there. Let's just go through them one at a time, I guess. So go to Archer, open up Archer. This was down like $400 and some dollars. Now it's only down $250. So you're getting the move in the right direction. You have a January call against 200 long shares of stock. And you're kind of, what is it? It's trading 860. And you've got 75 cents left in both of those calls. So that's about 40 cents per 100 shares, or $80 plus the 150 is about $230 left to make in this. So not a lot of risk in here. I don't think I'd be that worried about this particular one.
Okay.
Angel Studios, again, not doing anything in there.
Plan.
This is one that you could do something in, but again, it's actually kind of working. You're actually back in the green in here, and you're not really in a bad position. Like, you've got the premium in there at the 27 straddle. So you're short the 27 put and the 27 call. And the combined premium of those is almost $10. So you're good all the way up to like $37 and down all the way to like $17. So I don't think you touch that one either.
Okay.
The bigger ones, Weeble, that's just a covered call. I don't think you touch that. ETH, these are the ones we sold those. So we sold these when Ethereum was down on Monday. So just in this week, they've already appreciated 66% of what they can appreciate.
So take these off?
You could take those off, but I'd probably leave them on. There's so little capital, and there's only 2 weeks left in that contract.
Yeah.
I mean, you could take it off, or, well, the one has 42 days left, and the one has a lot more value left to come out of it. So I would wait to take it off when you get an Ethereum update. So right now, Ethereum's down like 5% today. I would wait till you get an update to take that off. Google is just not cooperating at this point. If you're taking Google off, you're basically cutting your losses. What do we got in here? It's marking at, they're already marking. You got December and December. Again, I would wait to cut your losses in here and into a down day if you get one. MP, this one's working nicely. So in here, you could take this out to January, which is probably not a bad thing to do. I would look at collecting a credit, rolling out to January, and maybe even moving your strike down from the 70. I'm not sure.
Should we do both of them? Or just...
There's only, yeah, do both of them. And then if you go, no, is that the right January? Yeah. Is it?
Yeah.
Yeah, 42 days. Yeah. So then if you sell the 70 put in January, that's the call. And then that gives you probably as much as both of your other ones combined. And then maybe like the 80. What is the 80? Oh, I like that. So you're increasing your break even point by $10 to the upside, or $12.50 basically to the upside, and by $2.50 to the downside
Okay.
by doing that, because you're collecting another 250. Okay.
MU.
MU, this is rally. You have 170. I don't know that you really. I mean, if you want, you could roll that 165 up to the 175 to get a little bit more credit. I think you're in January.
Is it the 175?
Yeah, that give you almost $1 in credit. Okay. Now, NVIDIA here. NVIDIA not working today.
I'm back, guys.
Recording a YouTube video at the moment.
I don't know. Honestly, NVIDIA not so terrible here. If anything, I would be rolling my puts further away from the money, so taking my puts from like a. But hang on, I don't know that we want to do that here. I think maybe you just let NVIDIA sit, because like, what's your overall delta in there?
31. That's
You're
like
at
2.
30. Yeah, so basically your strangle is pretty net neutral in there, and your shares are just basically active shares. So you're basically just long about 30 shares there. And
Okay.
the Oracle. All right, so this one I would adjust because you got earnings coming up next week. You're in two different expirations here. I would adjust this. I would buy back the December. Actually, no, I'd just leave the December one. And then come in here to the January. And I would probably move that further out of the money to get some risk off of there. Like maybe down to the 8, the 195 or the 190. Not the 180. Like the 190, 195, somewhere around in there. Yeah. And that moved your risk, what? Like $20. So yeah, that actually freed up about $2,000 in capital right there by doing that. And then Tesla, I would do something similar in Tesla here. So I would probably roll both sides in your Tesla. So I would be looking to reduce the premium and your delta, reduce the premium amount by about half. So go from, you're at an $11 there and a $5 there. So I would sell a $5 put on the put side and a $2.50 call on the call side. So that should put you down in like the 380 range. No, that's, yeah, three. Yeah, there you go.
Mm.
And then on the call side, make it even wider, further up, further. Now
Okay.
the 250s range.
It's like 605.
Yeah, 600 is fine. would do something like that. So you're going to pay an $8 debit. Go ahead. But that should also probably free up a little bit of capital in there too. It didn't free up much, but it helped. All right. But so here, why we did that. So you basically you started trading, you had a good week or two when you first started trading, you paid yourself a little bit of money, and then you proceeded to get tested on most of your positions. You had a bunch of short positions on, so you were taking your winners and your shorts as you were being tested and you were going down. You went down about $6,000. So you over the course of like the last month, you were down about $6,000. Now you've come back to where basically where you started from, but you still have all these positions on. So even though you have these losing positions that are still on, any type of positive movement is now going to actually be putting money into your pocket because you took winners off all along the way. So yeah, you do have some losing positions, but you don't have to mentally look at them as, oh, I lost money in this particular stock, because we've already closed out and moved on from all the things that you did win money in. So what you're left with at the end of the day, a lot of times when you trade this way, is going to be the positions that have given you a hard time, because you take your winners when they win. So often you're going to be looking at a portfolio of things that just kind of look like you're not winning across the board. But you got to keep in mind the amount that you started with. And once you're above that amount, you're actually winning, even if you're still working with all the ones that still gave you a hard time. So right now, you're down $100 on the day, but like if you have another $500 up day, which I mean, I think yesterday you were up about $1,500 yesterday. But if you have another up $500 up day, all that's going to be profits, even though you still have a lot of losers like year to date out there on the board. All that $500 is going to be profits. So that's why we're trying to free up capital, get our risk away from the current prices of these larger positions, especially in Oracle because it's got earnings coming up, and Tesla because it's a real volatile stock. And then I don't think you, I don't think you adjust anything in the MES or the Russell, because the Russell's actually working today. I have rolled it a little bit if you open up the Russell to see what the new strikes are. So we were down at the 4,300. Now we're at the 40. I'm sorry, the 2,300. Now we're at the 2425. So I rolled up because this Russell has had a monster rally. I really haven't adjusted the call. It's basically just been getting tested and tested and tested. So today it's coming back down. The Russell's real weak today, but overall, you still have 100 plus points to the upside in here and 100 plus points to the downside in here, right at 100 points to the downside. So you're pretty neutral, and you've got about 42 days left in that one, I believe, as well. I think you just let that one go. It's not using tons of capital, and there's still about 3,000 or close to $3,000 in premium that can come out of that one. So now we just wait. The next thing that's going to potentially be a challenge for you was going to be Oracle earnings, and that I think is next Wednesday. And then another thing that I want to keep an eye on moving forward is bonds. Look at the bond chart. So it's on your watch list over in the right hand corners, or you can just type in /ZB.
Mm.
Bond's getting wrecked today, down a half a point. And you can see when you're looking at the yearly chart, but you see how draw a trend line
What?
across the so click on the actual chart. Yeah. You see how that little draw tool, say new drawing, then do price level, not trend line, sorry.
Wow, look at that. Oh.
Cancel. Yeah,
Do.
do price level. And then you see how back in September, you see how back in September this thing popped up there, and then it came back down and found these new lows right here. Yeah. You were just at that. Yeah,
What?
go back,
There?
go back, go up, 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 up. See how September it popped up.
Mm.
You see, yeah, you're on the pop up, and then it came back down and found these new lows. It found this new bottom that happened in October. The bottom. Go to the bottom of the October time frame. The bottom of those candles. There, the bottom of those candles. But put it up to the bottom of those candles. You're below those candles. Zoom, yeah. Move that dot over so you can actually see where those candles are. There you go. There. Okay, click off of it. Now it'll stay there. You see how we're breaking now through that, what was a level of bottoming, and we were continuing higher, and now we're breaking back down through that level. If we continue this down move, I want to look to see somewhere around where we started this rally out of the hole in September. I want to look to sell puts in bonds too. So if we can get back down to like around this September low area where we popped out of this hole, so it's probably going to be somewhere between 114 and 113. If we can get bonds back down between the 113 and 114 level, then we'll look at selling puts in these bonds. So put a price alert at 114. So then you'll change the trick, dude.
No.
No. Hang on, go back. You just put a price alert in for go back. There you go. Go to the one. You're at the 113, not the 114. Look at you're at 113. So go to the 114. That's fine. That's close enough. Good. Now hit the alert. Now stop and do where it says trigger. You need to change the trigger to less than or equal to. There you go. There you go. We want to be notified if it gets below this. So go ahead and now hit create alert. There you go. So now we'll get a notification to let us know, hey, it's time to sell, looking to sell in puts and bonds. All right, you got about $3,000 in capital. I don't think you put on any new trades today. I think just reducing that risk in there is good enough. And look at that. You're already starting to go up on the day. You're almost positive. Who knows? By the end of the day, you might be in the green. I think that's it.
Right.
Does anybody have any questions? I know we got a lot of people in the chat today. Does anybody have any questions? No? Bueller?
Nope.
Bueller. Okie dokie.
It's a good show.
All right. Well, thanks for tuning in. Thanks for watching. I hope you guys found that helpful. Don't forget to like and subscribe and come hang out with us in Discord. And we will see you on Monday.
Another day at the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in the blank minds. Margins and leverage like mountains to climb. Spent the whole week on Delta and Greeks. Gamma theory ain't cutting through their peaks. Volatility shakes, but they don't feel the quake. Future contracts blur on this financial break. Can't you see the candles rise and fall? Risk and reward, it's a game of all or no. like his empty streets. Hedging positions, but the questions repeat. Time decay means nothing to the young souls. In this marketplace, it's like digging holes. Iron condor flies, but it never lands. They can't grasp the feel of these trade winds. Liquidity tried, choking on the sand. Profits and losses, they'd rather go play bands. Can't you see the candles rise and fall? Risk and reward, it's a game of follow no. Options open, futures closed, eyes blind. Frustrated fathers dream in the stock grind. Can't you see the candles rise and fall? Risk and reward, it's a game of follow no. Options open, futures closed, eyes blind. Frustrated fathers dream in the stock grind. In the stock grind. Ow! In the stock grind.